What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on natural gas prices.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on a price chart and how we got the next leg to the downside on ticker symbol BOIL and on ticker symbol natural gas futures. Then I will continue with the fundamental news and I will show you that right now we have completely different sentiment on different markets regarding the natural gas prices, and this explains its choppy price movement. And at the end of this video I will share my thoughts and my technical analysis, and I will show you what should we expect next. So let's start with the price chart. We are on ticker symbol NG1 exclamation mark. It is natural gas futures, and I made my previous video. Let me show you. I made it right here, and I've told you that we have to complete the movement to the downside because despite its quite choppy movement, the latest wave didn't have proper subdivision, and my main assumption was that we should land at the range of 0.5 and probably we might have a trend reversal. And guys, you may watch my previous video and there you can find exactly the same drawings that I made just several days ago. And as you can see, this asset acts exactly as I predicted. We touched to the tick the 0.5 Fibonacci retracement level at the price point of $2.541, then had a very good bounce and we went higher. Yes, I didn't tell you to enter any positions. It was just an assumption that probably this is the most probable outcome basically, but it wasn't enough to force the trade. And I've told you that we have to see more confirmation from different sources, from different tools, in order to make a conclusion that the next leg, the next potential movement of certain assets worth our attention. On top of that, let's switch to ticker symbol BOIL, and it is leveraged ETF based on natural gas prices. I made my previous video right here at this point, and I've told you that most likely we should see another leg to the downside, because from this swing high, let me show you in general, as you can see, I made a breakdown of this internal wave, and it is nothing else but the third wave. And on a slightly bigger scale, we have this is our first, second, this entire wave is the third one, fourth and fifth wave to this top. And this means that we have to see the at least a simple zigzag movement to the downside. And this movement usually has 3 or 5 wave structure in its A wave, and we have it 1, 2, 3. Next one, we have to see strictly 3 waves to the upside into the B wave, and this is 1, 2, 3. And we have to see strictly 5 waves into the C wave, and we have it 1, 2, 3, this is the fourth, and fifth wave to this bottom. And right here I've told you that we have to see this at least one more leg to the downside, and most likely it should retest the range of previous swing low. As you can see, it hit it to the tick. And this is, guys, this is the pure evidence that technical analysis is extremely powerful. And you can watch a lot of my videos regarding this ticker symbol from the beginning of April, and you can find that this asset is very technical, and we caught a lot of its movements, and we gained more than 60% of potential profit with the trades on this ticker symbol alone. And yes, we also booked some losses. We hit 2 stop loss orders on the negative side, which each and every of them brought us from 6 to 6.5% of losses. But in general, the overall win rate is very favorable, and we gained more than 60% of potential profit. So that is why you can rely on my technical analysis as a part of your due diligence. And let's continue with the fundamental news. I want to show you this article. It is quite interesting, and it was published on July the 10th on GIS Reports Online, and it is the general picture of entire natural gas market, and it shows that we have a lot of fluctuations on this market right after the Russians invasion in Ukraine. And we have, for now, if we take a look on the news, if you type in Google search bar natural gas prices, and switch to News tab folder, you will find a lot of news, but these news might be completely opposite and might even contradict one to another. And this is perfectly explains that on different markets, on different part of the world, we might see different catalysts for this asset. And that is why, let's again switch to, let's say, natural gas futures. That is why we have quite choppy, let's switch to 4 hours time frame and zoom out a little bit. We have quite choppy consolidation phase that lasts for quite a long period of time. From the end of February till present day, we are in the range that is not higher than 55% of its price action. And it is quite unusual for natural gas prices because previously, let me show you that previously we had much more choppy movements and as you can see, we had this harsh increase in its price till it reached its all-time high at almost $10 mark. Then we had this quite harsh decrease in its price, and for now, market is in undecisive phase. And we have to see one trend that will beat other. We have to see one major trend that should beat other minor trends in order to make our conclusions based on the fundamentals. But for now, technical analysis works perfectly well. And if you follow my channel for quite some time, you already know it. And that is why let's continue with the technical analysis. But before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, definitely on a bigger scale, it is very difficult to assume which way we might go. But if we zoom in, we can see the clear subdivision. And this means no matter what will be the next major movement, if we see some patterns inside on a minor scale and these patterns don't contradict with the major trend, definitely it is quite a decent chance to predict its next movement with a quite high percent of certainty. And what do we see right here? If this breakdown is correct and we just were in the retracement of the third wave, as you can see, we won the fourth wave, then we might see next leg to the upside. And if it happens, we have to break this previous swing high and we have to land somewhere higher. And we are on, as you can see, on natural gas futures. And to project this movement to the upside, we have to pull the Fibonacci extension tool from the bottom of the third wave to the top of the third wave and to the bottom of the retracement. And with the assumption that we have to land the top of our fifth wave, the most probable range is 0.786, and this is the price point of $3.088. And guys, let me show you what do we have right here. The previous swing high is at the range of about $3.049. This means we have a strong confluence range with two price targets. On top of that, we have another quite interesting pattern. You probably know, and I've told it several times in my previous video, that algo trades use quite dumb strategy. They use swing low, swing high, 50% entry point, and they have a price target of negative 0.236. And as you can see, if I pull the Fibonacci retracement tool from its swing low at this point to swing high, they touched this 0.5 Fibonacci retracement level. They added their long position. These algo traders added their long position, and their price target is right here at negative 0.236. And it is pure confluence range with this 0.786 on a slightly bigger scale and with this previous swing high. This means most likely we might have for this next leg to the upside that from our current range might bring us about 13% of potential profit. But we have a stop loss. We have to put the stop loss order right here at this previous swing high, slightly below this range. And it might bring us negative 6.31%. And this means 2 to 1, at least a bit more than 2 to 1 risk to reward ratio. This is not the best risk to reward ratio, but for some traders it might worth their attention. And to be honest, I don't like this type of trades. But for risky traders, and if you accumulate your position all the way down, this will reduce. Let me show you that it will reduce the downside potential. To this point, it might reduce it all the way down to 3 or 2%, depending on the average position. And it will increase the upside potential of up to 18%. And this risk-to-reward ratio of 9-to-1 is definitely more favorable. This means if you want to accumulate your position, if you want to catch this potential next leg, you have to accumulate all the way down, and I suggest you to do it incrementally. And by the way, it is not financial advice, it is just my opinion. What would I do if I were you? But if you enter your position incrementally to the downside, it will reduce your risk and it increases your profits. And I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed.